Good morning and good afternoon and a good day and a good week to everybody who's with us right now. Welcome everybody to yet another webinar of our FX Educast webinar series. I am your host Munther Marji, and I will be taking you for a trip for 3 hours today, looking for the best opportunities to trade in the market today. It is Monday, so I hope everybody had a wonderful weekend and that you enjoyed your time, enjoyed the results that we achieved last week. Very good results, especially towards the end of the week with the yen and the dollar and with the euro against the dollar as well. We had good results. We had good recommendations, the last of which was the buy dollar yen, I remember from Friday, which achieved a little bit of profit, around 25 pips by the close of the week. So today, of course, we are going to continue doing what we were doing all last week, hoping to get the same kind of results or even better than that. So that's why I really hope that you guys have the post-weekend energy so we can start right away. Of course, this webinar is sponsored by QTimeFX, our favorite forex broker, who is offering you fantastic spreads, and you can see that on the screen. They are amazing. Only 0.4 of a pip on the euro dollar and the dollar yen with 0 commissions. And to top that, we are offering you guys a bonus of $500, not just credit to trade with, but a bonus of real money that you can withdraw. If you are interested, please contact us at FX_Educast via Telegram, and let's open this account for you. Okay guys, so ready? If you are ready, let's hit the charts. I hope you are. So let's hit the charts, guys. As usual, first thing that we are going to talk about is the euro. I know you guys love the euro. Everybody all the time asks me about the euro. And welcome to everybody who's watching. Yeah, I hope you will have the fantastic time that you came here to have. Of course, with what? With results. So let's start with the euro, guys. And although we had a very busy week on the agenda last week, the euro did not break major levels. We had the Fed, of course, on Wednesday, and then we had the jobs report on Friday, two really huge events happening less than 48 hours away from each other. And even with this kind of huge events that we were waiting for, everybody was looking towards having some information, more information about the direction of the next move in the market. But even with the Fed and the jobs report, as you can see, guys, the euro continued to trade in the areas it did the week before that. So we did not have any major breaks. We did not break above 1183, the 2-month high seen on October 18th. And we did not break below our beloved and favorite support area, 1063. Sorry about that, guys. 1063 to, remember this area? It was 1063 to 1086. Do you remember that, guys? Do you remember this area? We talked about it a lot, right? Remember that? We talked about it. We said that it's an important area. It was built between two support levels, or actually 3 support levels. It was made of 3 support levels. All of them were retracement levels, and not only that, of course, with these retracement levels, what proved that these retracement levels are very important was the daily lows that we saw day after day in that area, and I'm going to show you all of that. But the bottom line is that we had a fantastically strong support area, even with the Fed. You know, during the commotion that usually happens when the decision comes out, sometimes the price moves to the upside, then to the downside in a sharp way, or the other way around, of course. Even with that kind of commotion, the price was unable to break below this support area. And to me personally, that by itself proves how important it is. But not only that, of course, we have a number of daily lows that we can use as confirmation of the importance of this area. And I'm going to show you on the chart. Okay guys, so this is our area, and it's going to continue to be our support for the time being. We're not letting it out of our sight for 1 minute, okay? Although we are trading well above it at the moment, of course, it is still important and we should pay attention to it. And of course, we can drop towards it at any time. So let me show you how many days had their lows inside this area. The first one was October 17th, when we had a daily low of 1063, and the price started rising or continued rising from there, resumed the correction, or maybe a new trend, who knows. It was a recovery attempt in all cases, and then we dropped again to this area. We found on October 25th, we found the low of 71. On the 27th, also it is exactly 71. And on the 29th, it is 72. And this candle with the long lower shadow, this is the Fed candle. This is what happened when the Fed announced the rate cut. And as you can see, the low is 1079. So all of these daily lows, 1, 2, 3, 4, 5, are inside this area. So it's a retracement area, a confluence of retracement levels, 3 retracement levels there, very close to each other, 63, 67, and 86. And the price is obviously respecting this support area. So we're not going to change our mind that this is the most important support area for now. On the contrary, everything that happened last week proves that this is the area that we should pay attention to. Okay guys, so this is for the support, of course. What about the resistance? We are still believing that we need to break above October 18th high, which was 1183. And as I said in previous sessions, there's a problem with this high because it happened right at the final moments of that week, just before the market closed for the weekend. And that is why it did not appear on the screens of all brokers, all charting services. There was differences between the high from one broker to another. But of course, we are talking about pips, 10 pips or so between, for example, my broker and my charting software or charting service that I use. Nevertheless, we are going to use the ICE high. And that, of course, is the main exchange for currencies in the world, and that is 1183. So 1183 is going to be our resistance for one more day, and as you can see, of course, we are extremely close to it. We are trading currently around 15 pips below that 2-month high. So any push above 1183 means that we are going to trade at a 3-month high for the single currency. And this is what we need, of course. Under the current technical outlook that we really believe in, we believe that the euro has a great chance of recovering on the long term. But of course, we need to see evidence of that. Up until now, it is trying the bulls are trying, the euro is trying, but we need to see more because we are currently trading above the top of the wedge formation. This black trend line, as you can see, of course, it starts with the high for 2018 and touches other important and significant tops. The one seen in March, the one seen in April of 2018, and then we had a period of not touching this trend line up until this summer when June top, probably one of the most significant tops for 2019, was touched by this trend line, or it touched the trend line. And after that, of course, we tried to break above it. We failed the first time, and the second time we are trading above this trend line. And remember, guys, what I said before. Remember, we said that the second attempt to break an important level is usually stronger than the first. And that's why we really expect the euro, after this failed attempt here, it closed above the trend line, but we dropped again to trade below it. Now we are above it, and we need to show strength. That's the first thing that we need to show. The first sign of strength that we really need to happen now is to trade above October 18th 2-month high. That is why 1183 is very important now. So keep your eyes on that. Now, although this trend line, this blue trend line, does not make any kind of sense. No, it does make it does make sense, but I mean, it does not show the qualities that should be there in a good trend line, because it only touched twice, and after that it's not touched at all for more than a year. So I don't know if we can count on it, but if we draw the trend line from the 2018 yearly high and try to be exact in drawing it to touch the March high of that year, we will have ourselves a trend line that is still above the price action that we are seeing these days. So if we draw this trend line, we're still below this trend line. Where is the trend line currently? It is extremely close to August top, which was 1250. Okay, so that means that even with breaking above 1183, to feel very good about this break, we need to see the price moving above 1250. Okay, so that means that the initial resistance is at 1183, and in all cases, of course, we have 1209. We talked about that last week. It's a Fibonacci level, but we need the price to break above 1150. Sorry, 1250. Okay. So for now, what kind of orders can we place? What kind of recommendations can I give you for the day? Well, in my own opinion, breaking above 1183 is a good reason to buy the euro. We need to see the price breaking above 1183, and that by itself, under the current technical outlook, is a good enough reason to buy the euro. So if you see the price above 1183, I believe you can initiate a long position, but of course you need to take care of the risk management, because this is it's going to be a 3-month high if we trade above 1183, and that of course can have some kind of risk, because the price can retreat after reaching highs that were not seen for a period of time. So of course we're going to specify what kind of stop level we need to use on this Okay, guys, so uh, what kind of stop can we use for this? One of the stop levels that we can use is below the rising trend line from October 29th low. And when I draw this trend line, I neglect the long shadow that we saw when the Fed gave its decision. So with that, this trend line is currently running around 40. And you remember from last week, we talked a lot about 1136 as a retracement level for the last part of the corrective attempt. And as you can see, we had Thursday and Friday lows. Very close to that, to the 30s. So in the 30s, we found support, and of course, these retracement levels are very close to each other. So you can also use this, which is 27, which is also close to the 30s, very close. As you can see, this is very accurate here. It's the 50% level of the drop, sorry, of the recovery from the Fed low to the highest price seen after that. And one very interesting observation that I have for you is that this this looks like a lot like a flat correction. Of course, ideally, if you want to be technical about your elliott wave counts, usually the top of B wave goes above the previous top, but of course it's not a rule. It is something that happens a lot of time, but not all of the time. And as you can see, we have three waves, corrective sideways price movement that terminated very close, or maybe exactly at the 50% retracement level for the previous move. And this, of course, indicates the end of a correction. So if we are right about this, then the chances of reaching a 3-month high are extremely, extremely good. And we need to start thinking about where are we going to go when we are moving higher. And for this, I need a longer term chart. As you can see, the 50% level of the last leg of drop, which came, of course, which took us down from the top seen in June to the bottom seen, the 29-month bottom seen on the first day of last month. The retracement levels for this move can be very helpful in estimating what levels are we going to reach. The 50% level is at 1146, and of course we are already trading above that, so we switch to the next one, and it is 1209. Of course, this is 61.8 level. Guys, this is the most important Fibonacci number, the Fibonacci retracement. If you are using Fibonacci retracements, you know that there is no number as important as 61.8. But there's a problem here with this level, and that is if we break above 1183, the distance between 1183 and 1209 is what? 26 pips. So can we break above a resistance like 1183, which has been holding us down for 3 weeks, and then expect a move of 20 pips? I don't think so. So it is expected that we can overcome this resistance. And if that happens, that would be fantastic for the bulls. Above here, of course, we do have an area that held the price down for a number of days back in August. The highest price in this area is, of course, 1250. We already talked about that. But we do have levels that are a little bit below that, 42, 1242, 1233, 1223, 1231, and 1229. So between the 20s and 50, we do have an obvious resistance here, guys. As you can see, This is the area I'm talking about. I'm going to delete everything, and I want you to see this area. Okay. As you can see, it was creating all sorts of problems for the bulls when they tried to recover at the beginning of August. But of course, this area survived and pushed the price lower. Now, breaking this area on the way up would be fantastic for the bulls. Actually, super fantastic in my opinion. And it could be the catalyst that we need in order to see serious gains for the euro. Up until now, of course, we had a wonderful October, and the euro was achieving gains every week there, almost every week. And by the end of the week, we were trading almost 300 pips above the low that we saw on the first day of that month. And that is good, that's great. But you know, this thing can accelerate and we can achieve more gains if we overcome this area. This is my own opinion. And of course, even with such great areas that we really like and believe in the strength of, we need to keep our eyes on retracement levels. So I'm going to keep my eye on these retracement levels, which are above this area, the first of which is 1260. Of course, 60 and 50 are very close to each other at the top of this area, and the next retracement level are extremely close to each other. So what we should do here is to treat them as one area, okay? The 50 and the 60 both are one resistance, because we only have 10 pips between them. Above that we have 1289, and above that we have 1351. These are the 78.6 and 88.6 harmonic ratios. Anybody use harmonics here, guys? Let me know. I'm gonna get to your comments immediately after we finish the euro. Of course, we have some comments. Welcome everybody, very glad to have you all here. And once we are done with the euro, I'm gonna talk to you one by one. Okay, so these are the expectations now, of course. Let me summarize for you what is the bullish possibility, and then we'll talk about the bearish possibility. The bullish possibility is if we break above 1183, we should start rising. And one of the very important resistance areas in this area is between 1220s. We have a resistance at 1209, but we really believe that we can overcome that without a lot of problems. I hope the market shows that we are right about this one, because 1209 is an important resistance. But from where I stand here, the bulls should be able to overcome that important resistance. Above that, we have an important resistance area in the 1220s to 1250, and 10 pips above that, we have an important retracement level. So 1250 is the top of that area, 1260 that retracement level. I want to see the bulls push beyond 1250 and not stop at the 60, of course. So it will be a double break if they can do that. A break of 1250 and 1260 at the same time. That would be fantastic for the bullish scenario. Above that, we do have retracement levels, harmonic retracement levels that we need to care about at 1298 and 1351. Another bullish possibility is, of course, dropping back to the 30s, the same area that saved the euro on Thursday and then again on Friday. The daily lows for Thursday and Friday are 30 and 27, only 3 pips between them. So that shows you that the 30s is an important support. And in my own opinion, dropping to 30s is yet another chance to go long on the euro. So if you want to go, if you are looking to buy the euro today, what I want you to do is to wait for a break of 1183, and that is a buy signal, or wait for the euro to drop to the 1130s, and that is also a buy signal. So in both cases, I recommend buying the euro. Today, I do not recommend a short position, to tell you the truth, unless something huge really happens, and that is a break of our very important support area 1063 to 1086. Now, what about the stop levels? If we initiate a position on the break above 1183, our stop should be below the 30s, below the daily lows for Thursday and Friday. Okay, guys? But if we are lucky to get a long position in the 1130s, then we can place our stop just below the important support area that we have been talking about for 2 weeks now. We really believe in the importance of this area, and it really proved itself all last week, which of course proved that we were right about believing in it, and that is why our stop should be below this area. We should not place stop levels that are above this area, if we can, of course. I mean, risk management is very important. It's not also always only technical analysis, but also risk management. So let me go to my trading platform and let me place my orders. Okay. So the first order is a buy stop. We are waiting for the price to penetrate 1183. 10 pips are enough. In my own opinion, even 5 are enough, so I'm going to place it at 1188. My stop should be below the 30s. The Friday low was 1127, so I'm going to place my stop 20 pips above that, 1107. Okay, and my limit is 1250, 1260, something like that. What do you think about it, guys? I'm going to be a little bit greedy, because if we break above the 2-month high, I expect some kind of good movements, and the next level, one of the harmonic retracements, was 1298, and that is where I'm going to place my limit. So this is the first order for today, guys. Okay, buy euro at 1188, stop 1107, limit 1298. And of course, tomorrow we're going, if it got hit, if we are in the market tomorrow, we will check what happens to it. If it reaches the stop or the limit, that's it. If it does not, we need to close it the next morning, because you know these trades are not very long term. We close them on a day-to-day basis, and after that we look to initiate more entry orders, more positions. So as you can see, guys, 1188 is my long, 1107 is my stop, 1298 is my limit, and place. Order placed. Okay. Now what if I see the euro in the 30s? In the 30s, that supported the euro on Thursday and Friday again. Well, that, in my own opinion, is a reason to buy. Thursday's low was 1130. Friday's low was 1127. Obviously, we have something in that area, and as you saw, it is the 50% level for the recovery from the Fed low, exactly at 27. But I'm going to place my order at 30, which is the highest between these two daily lows. And my stop, of course, needs to be below the bottom of the key support area that we were talking about all this time. To remind you, it is 1063 to 1086. That means that we need to place our stop below 1063. Below 1063, what, maybe 20 pips. That, in my own opinion, that is enough. So 1043. And my take profit now. Of course, we can think of the same take profit or same limit as we placed on the order just before this one at 12.98. We also have 12.50 to 12.60 to think about. So I'm going to place it at 12.98. But what I want you guys, what I want you to do, and please, yes. What I want you to do, guys, is that if you are following my long euro recommendations for today, if in case things are going great for us and we reach 12.50 or approach 12.50, we show some kind of weakness around 12.50, 12.60. These levels are providing us with some resistance that we obviously are unable to overcome. That's it, guys. Close your position. Okay, don't wait for 12.98. But if we penetrate through 12.50 and 12.60 and we start trading above them at 65, 70, that means that 12.98, of course, it will be extremely close at that point, and we can wait for that limit. So I want you to decide what to do at 12.50 to 60. If we only reach there, unable to break it, then close your position. And of course, by then, if it's a buy at 11.88 or at 11.30, in both cases, when we reach 12.50, you will be swimming in profit. Okay, so there's nothing that you need to worry about. We can, of course, close our positions if the price gets there with a great profit without even having a very strong emotional factors that affect our decision making. So that is great. We are done with the euro. We have our retracement levels calculated, our resistance, our support. Now we know all the important numbers for today, and we already placed our orders. But let me change the chart for the euro because we're talking about the euro. So as you can see, we have a buy here, a buy here, and a buy here. Okay, and we have the stops, and here is our limit. Let's hope for that. Keep your fingers crossed, guys, and hopefully 24 hours from now we will be talking about the limit being hit. Although usually on Monday it's not a very exciting market, but who knows? Who knows, right? Okay, guys, so we are done with the euro. I'm not gonna place a short order, but I'm gonna talk about it. What justifies a short position? I'm not gonna place it. I'm repeating this. I'm not placing orders to short the euro. Under the current technical outlook, I prefer to be either flat, no positions, or on the long side of the market, having a long position, having a buy. But I'm not really looking forward to shorting the euro at this moment. Maybe this can change, of course, if we have bearish breaks, strong bearish breaks. Of course, I'm going to follow the breaks. But at the moment, there is no reason to do so, in my own opinion, of course. So, if you insist, if you really want a short signal, I'm not going to place this order again. But we can sell if the price breaks this area, this important support area. And that happens at 10.43. That's 20 pips below the bottom of this area, which is, of course, the stop for our long position in the 11.30s. And we need to keep the stop limited here because it's a risky position, in my own opinion, when you short the euro. And now that we are trading above the top of the wedge formation, it is risky. So I don't want to risk 90 pips or 80 pips like I do with a long position that I really believe in. But just going back above the top of this area is enough, in my own opinion. It is the top of this area is 86. So maybe 10 pips above that at 96. 10.96. That leaves our stop at 53 pips. Yeah, it makes sense. And what about the limit? Of course, if we break this area, it's a strong, important area, we can think about dropping at least to these areas around the bottom that the last leg to the upside started from. and this is 989, but we have a retracement level here that we talked about last week, which is the 995. I think it's 61.8. Yes, it is the 995, and as you can see here in this, let me magnify this for you. Here around this 995, we have daily lows here, 1, 2, 3, 4 obvious daily highs, 5 daily highs, and here we have a daily low very close to it. So it is really obvious that 109.95 is a major support. So if we sell the euro at 10.43, as you can see, the limit is not that much. In my own opinion, you should not think of levels below 109.95, and that leaves us with what? 48 pips of profit. This is not my recommendation for today, but I always, of course, represent the view of both parties, so both sides of the aisle. So if you want to sell the euro, I really recommend not doing this around current levels. And if you do, please use, maybe you have something that you see on the chart that you believe is going to push the euro to the downside. If you have that kind of situation with the euro, it's okay, you can sell, you can do whatever you want in the market, as long as what? If you were here in my previous webinars, you know my view, you can do whatever you want in the market. You can flip a coin, okay, and decide to go long or short upon that flip of the coin, but use good risk management. This is how much I believe that risk management is this thing that separates winners from losers in this market. Do whatever you want if you use good risk management. Who knows? It's a market. It can go in any direction. So you may be right, even if the chart is pointing to the upside, sometimes the price moves to the downside, of course, and maybe you can get that right. Although, of course, I don't recommend you doing this, but even if you want to do this with a good risk management, with not risking a lot of your account, it's okay, you have my blessings. Okay, guys, so we placed our orders, we talked about the bearish possibility, and now I want to turn to your comments. Okay, Simple Woman blog. I really don't understand how to do it. Well, I'm here to help. You just tell me what is it that you need to understand, and I'm gonna explain it to you in the best way possible. But let me know what is it that you do not understand, because I don't know what you do not understand. Not a lot of information in that comment. It's a very short comment. Ethan is here to help. Thank you, Ethan. Victor is asking about the withdrawal from his account. I really hope that you are having fantastic trading results, Victor. And if I helped in any way, I would be extremely happy. And if you did it on your own, kudos to you. Congratulations, buddy. And another question, could you teach me how to trade? Well, what we are doing here can give you a lot of information. This is not an educational webinar, of course. As you can see, this is a live analysis and trading session. But nevertheless, you can catch bits and pieces of the tools and the methods that I use in analyzing the market and deciding on where to go long, where to go short, and why we go long, why we go short. So if you follow these webinars, Victor, I promise you that you will catch at least bits and pieces of the tools that you need to analyze the market in the right way. But of course, this is not an educational webinar. We have educational webinars on our channel. Please go back to them, check them out. I have a number of very, very good educational webinars there that can give you a lot of information on how to use everything from moving averages to RSI to trend lines to retracement levels. I have a lot of educational webinars on FX Educast channel on YouTube, so please check that out. And if there's anything I can help with, you can find me on LinkedIn and Facebook. If you have a question about how to use these things, how to use these tools, the technical tools that I really, really love, please contact me via LinkedIn or Facebook, and I will be there to answer your questions. When I can, of course. I'm not a free man. I don't have that kind of schedule where I can do whatever I want anytime. So when I can, of course, if anybody needs help, I will be glad to help. We're glad to give you answers. Okay? Ethan is also capable of teaching you how to trade, of course. Jennifer, you're going to try this. I assume that you are talking about the orders that we have placed. If you have a real account or a demo account, you can just follow the orders as I give them to you. I don't make this very hard for you guys because we have beginners. Of course, I realize that we also have people who understand the market in a good way. They are not beginners, but of course we also need to make it as clear as possible for people who are joining this business right now, people who are trading for the first day or the first week or the first month. They need our help. So that's why I try to keep things as simple as possible. Jennifer, if you have a demo account, if you are new to this, or a real account, in both cases, you can start following the recommendations that I give to you. You can place the orders exactly as I give them to you. I give you the entry level, the stop, and the limit. And that's it. All you need to do is to take these numbers and place them on your account and see what happens in the next 24 hours. Some of them, of course, are going to generate profit. Some of them, of course, are going to generate loss. And we really hope that the total is going to make you satisfied. One thing I need to say to Jennifer and Victor and to everybody who is with us is that you need to focus on risk management. If you are new to this thing, I'm sure that you will mess up your risk management. This is something that all beginners do. There's no way around it unless you have someone to guide you through the beginning, because the beginning is very hard. You are entering a jungle that you know nothing about, and you think it's easy. A lot of people come into the market thinking that money grows on trees, but it does not. It needs a lot of hard work in able to achieve profit in this market. It's not something that anybody can do. In fact, around 80% of all traders lose money trading Forex and CFDs, and only around 20% do not have to go through that suffering. So in order to be among the 20%, what you need to do is you need to work very hard. You need to learn. You need to educate yourself. You need to find someone who is experienced to help you avoid the mistakes that the beginners do. And you need to continue on doing so. You read books, you attend webinars like this, you go to FX Educast YouTube channel and you watch the educational webinars, the great educational webinars that we have for you. And then you start to understand how this thing goes. But don't expect to be super successful from the first day. Of course, nobody is. Even I can think of a lot of people, a lot of legends that had a rough start. For example, Michael Marcus, one of the most legendary traders in the history of the world, started with losing all his money. But he did not give up. He came back. He said to himself, well, I'm going to try this again. I'm going to learn this the right way. And fortunately for him, he met someone called Ed Secoda, who is a real legend, and he taught him how to be a successful person. Jesse Livermore. To a lot of people, Jesse Livermore is not a human being. He's He's a demigod. He's the kind of trader that comes maybe once in a century or maybe 2 centuries. Okay, Jesse Livermore is, to a lot of people, the greatest trader who ever lived. Okay, and as well, he lost all his money on the first attempt, but he did not give up. He came back, he educated himself, he found the right method to trade the market, and then he started making millions upon millions of dollars. Okay, so with this, guys, I'm very glad that you are here. Stay with us for the next hour. Of course, we're going to take a break of 5 minutes or so. During this break, please, if you have any requests, shoot, and I'm gonna go through them. If you need me to analyze any instrument, I'm gonna be there. I'm gonna analyze them for you, and I am going to give you the best technical levels that you need to care about and on any instrument that you are interested in. And of course, for the major instruments that everybody cares about, we are going to provide you with trading recommendations for each and every one of them. So it's a break, guys. This is our first break for the day, first break for the week. And it's an opportunity for me to remind you that this free webinar is sponsored by QTime FX with fantastic spreads, zero commission, and a very generous bonus. So if you want to implement the ideas that we talk about in everyday webinar, then what you need to do is to contact us at fx_educast via Telegram. Open your real account. I don't care if it's $1 million or $1,000, but in my own opinion, guys, you need to trade real money to learn the market. Trading demo for a while is great. That's a step that I highly recommend, but you do not feel the real pressure of real money trading by trading the demo. Of course, you can leave your positions and say to yourself, well, it's okay, what? So if I lose everything, I'm gonna open another demo account. This is not real money. So you don't feel the pressure of making decisions under real risk, the risk of losing your own hard-earned money. And that is why I really recommend, if you are serious about this business, open your account with a small amount, $1,000 for example, or maybe some people prefer to go even lower than that. It depends, it really depends on you and what you have in your mind for investment, what the kind of capital that you need to invest. Don't put it all on the first attempt, just like Jesse Livermore and Michael Marcus. We were talking about them right now. They, lost everything on the first attempt, but they were smart enough not to put everything they have on the first attempt. So they had money to come back again after they have learned the market. So as a beginner, I really recommend opening a real account with a small amount of money, not a demo account. Try the demo account for a week or two, or that's it. I don't believe you need to trade demo more than 2 weeks, because after you get the hold of it, there's nothing new, when you trade your demo account. But when you start trading real money, even if it's a small amount, that is a totally different story. That's why I really recommend, guys, that you open your account and start trading and follow these trading recommendations that we give to you on a day-to-day basis. So come on, contact us at fx_ via Educast via Telegram, or of course we have Skype as well, and we have our YouTube channel, Facebook page. So we are there if you need anything, you need any help in opening your account. And if you do, we are giving away $500 bonus for new accounts, and we are giving you the opportunity to trade with such unbelievable spreads, which will make it easier for you to achieve profit with the smallest moves in the market. So with this, guys, thank you very much for being with us here for the first hour. Okay, as Ethan says here, he opened a real account and he got the $500. Of course you're going to get the $500 bonus, because this is an offer that we are giving away to everybody who open accounts with us. So come on, guys, let's do this and see you after the break. I'm gonna take a 5 minute, maybe 6, maybe 7, something like that of a break, and I'm coming back after that to answer all the requests that you have. Stay with us, guys. See you in 5. Hello again, guys. Welcome back to this ongoing webinar. I'm your host, Munther Marji, CMT, and I'm going to be taking you on a trip for 2 hours now. We have been together for 1 hour so far. Now we still have 2 hours to go. And during the first hour, we talked about the euro in great details. We placed 2 orders to get in the market on the long side of the market. We wanted to buy the euro. We said that above 1183 it is viable, and if it drops to the 30s, 1130s, it is also viable. And in both cases, what we need to do is, of course, to take good risk management, because anything can happen. We really believe in the upside, but anything can happen. We have our stop orders ready if things start to move against our expectations, and we have good limits waiting for us. And everything, of course, we give you all the details, so please go back to the first hour if you want to follow the euro recommendations for today, and you will find them, of course, in the first hour of this webinar. Thank you very much, QTime FX, for sponsoring our webinar for one more day and one more week. It's because of the generous sponsorship of QTime FX that you guys are receiving all this free analysis. Of course, this is not free. You know that. I'm sure people who have been in the market for a while know that these things are not free, and they can never be free unless you have a generous sponsor like QTime FX, our favorite forex broker, sponsoring it in order to give this information to potential traders and live account traders and people who are just interested in the subject, so they can go on with trading with the help of the analysis that we are providing you with, hoping that this analysis will help you achieve good profit in your trading, good results. So without any delays, guys, let us go to the chart again. Let me open my charting. Okay. As you can see, the euro is trying to rise, but it's only pips. We left it around in the 60s. Now it's in the early 70s and the lower 70s. So not a lot of movement, but it is trying, and we need to break above 83 in order to open the way higher. Now, how about we talk about gold? And gold, this is something that we talked about a lot recently, but I think on Friday we did not. This is from the last analysis that we did. It's still there on the chart last week. There is a high probability that this is a correction. The drop from the top seen early in September is a 3-wave corrective move, and that, of course, is indicated by breaking above the moving average and the falling trend line from October 5th daily high. We had an attempt to break above both here, but it failed, and the failure, of course, pushed the price lower. But once the Fed announced that, yeah, we are cutting rates for a third time in a row, 3 meetings, 3 rate cuts, although everybody was thinking that this is not the beginning of a cycle of rate cuts, it's only something that's going to happen once or maybe twice. Now everybody knows that it already happened 3 times, and who knows, maybe a 4th is coming. A lot of analysts believe that the Fed tries to avoid making important decisions in presidential election years. And of course, we have the US presidential elections in 2020. So next year, what a lot of people believe, at least after the very early part of the year, the Fed is not going to do anything unless it really really has to. So maybe we have a room for a fourth rate cut, and that's it. That's what some analysts believe in, people who follow the Fed. But of course, we cannot tell in advance until we get these meetings and the decisions that the Fed will take. But what we can do is we can go to the chart and analyze the market together and see what chances do we have of moving to the upside or to the downside. So guys, one of the most important things I want you to note here is on the last day of last month, which was Thursday, we broke above both the moving average band and the falling trend line that appears on the chart. It's the falling trend line for September 5th. It's the blue trend line here. We broke above them both and we closed above them, which is fantastic for the bulls. However, Friday was not a super day for gold. Yeah, we dropped, we turned up again. We closed around the place that we opened at, not like on Thursday when we opened very close to the low, closed very close to the high. That was very strong. So what now? This is the most important thing. For that, I will turn to the, or first of all, before talking about the short term, what I want to see is how the month closed and how the week closed. October closed on gains, of course, negating or refusing to drop as September indicated, and this is a sign of strength, of course. After having a candle like this, the price should have dropped. But you know, the gold is well supported by the Fed, by the monetary policy that is currently in place, and that is why it will be very hard to see very huge drops on gold, and that is what October candle is showing us here. You can look at this candle, no drop. We are moving higher in October in spite of what looked like a bearish candle in September. But it is not a pattern, you know, this is not a pattern that we can count on. It's not one of the candle patterns that mean something. What about the weekly? Let's look at the weekly, guys. On the weekly chart, we also have a close above the same trend line. Not really above it, but it is good enough. It's good enough, yeah, it is good. And this, of course, is another sign of strength. However, we have been rising for 3 weeks straight, so some kind of correction cannot be ruled out. In my own opinion, the overall picture should be to the upside, but that does not mean that we cannot see any kind of drop. Let's move to the daily chart. Actually, this is very strong. This is very strong. Close the best chart up until now for gold bulls is the daily chart. They have a fantastic position there and they are ready to achieve more gains. But what if the price drops back to the moving average area here or the broken trend line? Of course, that should be viewed as an opportunity to buy. So right now we're trading around 1511. And the bottom of the moving average area is around 1499. That's 120 pips below current levels. And the trend line is there, guys. The trend line that we already broke is there. So we cannot neglect the importance of 1499. Now, will the price drop there? I really hope it does, because if it does, it can provide us with a low risk trading opportunity. When you see the price dropping to retest moving average area or a broken trend line, you can buy here when the trend line is touched or when the whole moving average area is covered. That means, of course, the bottom is touched. And you can have a very reasonable stop just below the broken trend line. Your stop does not have to be 100 pips. It can be very small, right around this area, just a good number of pips below the trend line. If you buy the trend line, maybe 40 pips below that trend line is enough, so you can risk 40 pips in order to achieve much more than that in profit, because the overall picture with this fantastic daily close on October 31st is positive. There's no question about that. Now let's move to the 4-hour chart, see what do we have there. And here let me use some indicators. Let's see what the indicators say. We do have some kind of a positive signal from stochastics, although the cross did not happen in extreme areas. It is still a cross to the upside. MACD is not saying anything. RSI changed around 50, changed direction around 50, which is of course a good sign. And the important thing is that we are trading above the moving averages. This is the hourly chart, guys. So as you can see, the moving averages are providing support. They have been providing support for a while. This is the Fed, I think. Yeah, this is the commotion that happened during the Fed decision, and after that the price started rising to the upside, and we found support here, as you can see, on the bottom, at the bottom of the moving average area. We found support here for many hours inside the moving average area, and obviously, as you can see, we were finding support at the bottom of the area. Now we're finding support at the top of the area. In my own opinion, this is really bullish, guys. So I really hope we see 14.99 so I can initiate a long position. But with this beautiful hourly chart, I think the chances of that happening are slim. They're not great at all. So we may have to buy at current levels, guys. Or maybe we will look for a resistance that, if broken, we get in. Let me delete. Okay, so where have we been finding resistance recently? October 31st high was 1430, and this is not the daily high for November 1st, Friday, because we did see a little bit of price action above it, but this is, let's say, the close of the day. The close of Friday was also 1514.02. That's 2.8 pips apart. And when the market opened last night, the high was 1513.76, also pips below this. So in my own opinion, I am going to use this, guys, 1514 as my resistance. Okay. If the price breaks above 1514, that's a good reason to go long. And if the price drops somehow to 1499, that is also a good place to buy. So now, of course, we need to specify the stop and limit before we place our orders. The first possibility, of course, if we trade above 1514, we are going long, so we will have a long position at 1515, for example. Let me write these numbers down as I analyze so I don't forget them. Buy at 1515. Now, what about the stop and limit? The stop here, it's a little bit tricky here. because you are buying at a high level compared to a recent price action, and that of course makes the stop specification difficult. Or it does not have to be difficult. Sometimes it's clear, but you will be talking about a larger stop than usual, and that some people, that is, to most people actually, that is not really comfortable. So we cannot wait for the price to drop below the Fed low. Is this the Fed low? No, we cannot. Of course we cannot. Or the jobs report low, which was 1503.1. So we need something that is below 100 pips. And in this case, maybe we can use the retracement levels for the move up from Friday's low to Friday's high. Let's leave this. And as you can see, guys, we have a number of retracement levels that we are keeping our eyes on. The 38.2 level is at 1511. The 50% level is 1509.6. The 61.8 is at 1508, and the 71.4 is at 1506.8. And I would like to keep the stop as further as possible, but I don't want it to be above 100 pips. So what I'm going to do is I'm going to place it 10 pips below 1506.8. $1505.8. It is, 92 pips. I can try to make that a little bit less, a few pips less only. Also, we can adjust the entry level. Instead of waiting 10 pips above 1514, we can enter the market the minute we start trading above 1514, and that is, for example, 1514.01. So yes, we have an entry now of 41, and that is 83 pips of a stop. That is reasonable for gold. Of course, you need to understand the instrument that you are trading. Sometimes 20 pips is enough as a stop. Sometimes no, it is not. 20 pips below or above the important levels that you are counting on. And of course, that would result in a stop of sometimes 50, sometimes 95. So it is, of course, it depends heavily on the instrument itself. So now, what about the limit? For the limit, of course, it will be very hard to be analyzing that on a 15-minute chart. I want to think about really high levels here. The minimum, of course, is to again challenge the highs seen in October, which were very close but below 1520. This time, a break above 14, I believe, can result in overcoming these daily highs that were just below 1520, like this one, October 3rd, 1519.7, and we have another one here, 1518, and another one here, 1517. So just before reaching 1520, we see the price stalling, not being able to move higher. But this time, of course, after several breaking attempts, I think a breaking above 1514 this time is going to result in a serious move to the upside. I don't think we can use the retracement levels for this move. So what I'm gonna do is I'm gonna look for horizontal support previous support or resistance levels that can be used as targets. In my own opinion, this is one very interesting, which is 1524, but there is some levels that can be more interesting than that, like this one, for example. This is 1526.83. As you can see, we have it here, we have it here, we have it here, we have it here. It is, if you want to adjust this just a little bit, to this top here, it's going to be at 1528. In my own opinion, this area is good enough. So limit at 1528. This is the first recommendation for gold today. Now, what if the price drops to 14.99? That would be fantastic. That would give me a good opportunity to buy, and at a very great price with the smaller stop. If we buy around here, that means we can use the retracement levels for the whole move up from the Fed low, and we can use the 50% level. That's enough because we have on the daily chart, we have the moving average band and the previous trend line are running extremely close to this level. So I'm not going to wait for these levels to be broken. Only with the break below 1498.4, let's say 20 pips below that, 1496.4, and that would be enough. I know that's a very small stop, maybe because it's very small. You can add 10 pips to that. You don't want to be too arrogant thinking that your entry level is really precise and specific to the degree that you place 30 pips of stop. I really don't believe in that. I know a lot of people do it, but personally, I don't believe in stops that are 30 pips at all. It is really arrogant. What you're saying when you place a stop of 30 pips is that I know everything about the market, and I know that it cannot move even 30 pips. That's 1/3 of a cent, guys, on the euro, for example. Against my expectations, which it doesn't represent me. This view does not represent me. So I keep my stops at a minimum of 60. I don't like to go below that. But here we have a situation of a low risk trade, really low risk. So we can buy at 99 and place our stop at 96.4, maybe 95.4. So buy at 14.99, stop at 14.96 or 95.4. Okay, that's 36 pips. And the limit, if we drop to this area, of course, as we just talked about, we found a resistance many times just before reaching 1520. We can use that. We have daily highs at 1518, 1517, and one of them is at 1519.7. So I'm going for the lowest in this group, and that is 1517. Okay, that's an amazing profit. If we reach that kind of limit, that would be absolutely fantastic. So now, let's place our orders. These are the orders that I'm going to place on my trading account. Let's start with the buy stop. We're very close to that. 14.1. My stop is 1505.8. It makes a lot of sense. And my limit is 1528, right? Let me check. Yes, and place. And we do have an order. Now, another order is the buy limit. And buy limit is going to be at 14.99. Our stop is very limited, very small this time, 14.95.4. And our take profit is at 15.17. We are getting closer and closer to 15.14. As you can see, the price is rising. The price is rising, guys. And maybe we will be triggering this order very soon while we are still here. So this is what we have for gold today. We have two long positions, long orders, buy orders that are in place right now, waiting to be triggered. Okay, guys? What else? Is there anything that you want me to talk about? Shelton, you just opened an account. Fantastic, buddy. Fantastic. I welcome you, and please join us every day where I'm going to tell you where to buy and sell on your real account. And when you achieve profit and you withdraw for the first time, I want you to come back and tell everybody that you did using these recommendations. Okay, buddy? So I wish you the best. Okay. Let's continue. One of the instruments we were really interested in last week was the dollar yen, and we recommended to buy at market. The market at the time was in the 107.90s. As you can see now, we are at around 108.30, so that should leave you with 35 pips of profit between the time we recommended a long and the current moment. So if you have a buy from Friday, I closed my long position on Friday with a small profit. But if you have a buy from Friday, please close it here, because we're going to talk about a new trading setups for today. If we find it suitable to reestablish a long position, we will establish long positions, but maybe we will not. So you have to wait for the analysis. This is the recommendation that I gave to you on Friday. Remember it. Buy at market right now. It was 107.90s. Stop 107.08. Of course, we did not even come close to that. And limit 10.16. Also, we did not come close to that. And the recommendation came with a warning line. Watch out for 109.30. Okay. What I want you to see here is the kind of magic. If you go back to Friday's video, you will see me excited, and you will see me clicking the buy immediately without not placing an order. Most of the time, you guys, you see me place an order and wait for the order to be hit. But when I took a look at this chart, go back to Friday's video, you will see that I said, well, I'm buying this thing right now. I'm not going to wait for an order. And that was because we had a 50% level and a rising trend line, both providing support around the same area. Okay, they were very close to each other, and that's why I believe that this support is very important. It's a support that you can count on in your trading, and you can count on to establish long positions. And we did establish a long position on Friday, and as you can see, the current price, we are something between 30 and 35 pips of profit on that long position. So kudos to you. Close your long position from Friday and enjoy the profit if you have followed this recommendation. And now let's see what is going to happen next. Of course, the price action that happened after Friday's analysis session confirmed the importance of 107.88, our favorite support at the time being. It's a very important support, and the price reaction from there confirmed that it is important, and confirmed that we can count on this support to go higher. Up until now, we have achieved something around like 40 pips above this support. Is there more? This is the most important question right now. For that, first of all, I want to check the monthly close. And I don't think we can do that with all this mess on the chart. So this is the it is indecision. Long upper shadow, long lower shadow, indecision. But having this coming after a drop, maybe just a little bit better for the bulls. Okay, what about the weekly? On the weekly chart, it is a completely different story. Okay, we as you can see, we touched during last week, we touched the top of the moving average area that I really believe in. And do you remember which moving averages I use? I use the 35, which is the blue one on this chart, and the 49, which is the red one. And as you can see, guys, just take a look at this magic. Touch the 49 SMA, simple moving average 49, and then boom, it dropped immediately more than 100 pips. The shape of the candle of last week is not bullish at all. But the fact that we found support where we should can overcome this bearish indication. I want to take a look at the indicators, starting with the weekly. Not very good. Not very good. Here we see that the stochastics, at least, is saying that things are not really good. What about the daily? I want to take a look at the indicators for the daily chart. Now, it's a different story. As you can see, mixed signals, different stories on each time frame. On the weekly chart, this is the most important thing. This is the most important thing. The top of the high of last week, the price top that we saw during the week was exactly at the moving average, which is bearish. But if we switch to the chart, we can see that things are different, and we are finding support in the moving average band. And we did find support around this moving average band before. Now we are again finding support around the moving average area here. As you can see, two daily lows inside this moving average area, Thursday and Friday. What about the 4 hour? I hope we find something more bullish on the 4 hour and hourly chart. And we do, because both stochastics and RSI have been in the negative zone, in the oversold zone, and now they are moving back towards normal levels. Okay, and of course the price is moving with that. The MACD is still not generating a long signal, but you know, the distance between the two lines is shrinking, which is good. So we need to watch the MACD on the 4 hour chart, waiting for a cross. We want to see, of course, the MACD crosses the signal line in order to generate a buy signal. For the RSI and stochastic, they already generated a buy signal, which is fantastic. And the most important thing in my mind is, of course, the retracement level that I have showed you before, and the rising trend line that I have showed you before on the chart. So we are bullish, at least for the short term. Now, having said that, we cannot neglect the importance of the 930s. The resistance in the 930s, of course, we do have a retracement level, and we do have a previous price top. It's the retracement level for the whole drop from April top. It's not any retracement level. It is the 61.8 retracement level. Previous top, as you can see here, a top from which the price collapsed, absolutely collapsed after reaching 930s. Again, we reached 930, actually this is 29, very close, recently, and again we dropped. We reached this high on Wednesday, and on Thursday the price collapsed again. But this time it does not have to be the same thing. This time find support here and start rising again, and that is of course because of two factors. Please keep these in mind. This one, let me color it in a different color so you don't get confused. 50% level for the recovery from October 3rd bottom, and we had a trend line. I think we used this bottom. No. So it must be drawn from this bottom, the actual price bottom. Yes, as you can see, we do have an important, we can adjust this a little bit to make it look better by touching. This is unbelievable, guys. I want you to take a look at the accuracy of the three touches on this trend line. Just look at this, and this is an exact touch, and this is what, maybe 1 pip below the trend line. So we do have a fantastic trend line on our hands, and we do have the 50% level, both of them very close to each other, and now the price is 40 pips above that support, showing us that the market is moving to the upside. So in my own opinion, although we have a negative reading on the weekly chart, that's not enough for us to give up our bullish situation, bullish position, bullish bias that we had late last week. The only reason for you to stop believing that the dollar yen is going higher is breaking below 107.88. Keep this number in mind, 107.88, guys. Okay, above it we're bullish, below it we ditch our bullish bias. Okay, so it's all about 107.88 for one more day. Of course, this is the same level that we were talking about last week, all last week, towards the end of the week, and now we are again talking about it. So where are we going to buy today? You see, now I'm thinking about where to buy, because I'm not talking about where to sell, because I need to let the market guide me. Now, a lot of people, a lot of traders believe that they wish and the market will move according to their wishes. But no, it does not happen like that around here. You need to let the market guide your wishes and expectations, not your wishes and expectations guiding what you think the market will do. So, of course, we are analysts. We look at the chart. We find reasons to believe in the upside or the downside. And after that, we let the market guide us. If I have an analysis like this one, I am positive that the dollar yen is moving to the upside. But of course, I can be wrong. Anybody can be wrong. Nobody on earth is right all the time. Very simple. Nobody is right all the time. Even if you are a super analyst, you are going to find yourself wrong sometimes. Okay, so if we break below a certain level, we need to give up our bullish bias. Okay, and without that happening, we should not look too short. Without breaking below 107.88, I'm not giving you a short signal for today or short recommendation. So the question now is not whether we should buy or sell. It is where to buy. And of course, where to place our stops. Let's switch to the chart. It is a little bit tricky when you want to decide where to buy, because last week, I'm sorry about this noise, guys, coming from outside. Last week we were talking about buying here, and that was a great entry point. But of course, you cannot do this all the time. You cannot find entry points like these fantastic all the time. So now we are going to try and find the next best thing, let's say. Let's call it the next best thing. As you can see, since October 31st, we have been finding resistance in the 30s. For example, October 31, October 31st. It's not the daily high, it's a session high. The American session high on October 31st was 108.33. On November 1st, the daily high 108.33, guys. And the current daily high for today is 108.33. Do I have to spell it out? It's very obvious. We have the resistance, the immediate resistance is at 108.33. So if we start trading above that, and I'm going to use only 5 pips, okay? 108.38, that is my entry for a long position. Okay, and the stop, of course, should be, it's very obvious. We were talking about 107.88 all the time. Now, this is the level that I count on, but I don't place my stop at this level. I stop below this level. I hide it. So how about 20 pips below that, guys? That makes a lot of sense to me. 68. And that leaves me with 70 pips of a stop loss, something very reasonable. Now, what about the limit? We talked about 109.30s many times. 109.38 is a Fibonacci level, a previous top, and in my own opinion, it should be used as the immediate limit. We do have limits above 110, the 110 level, but because we are currently trading very close to 108, in my opinion, if we buy around current levels and have a limit 100 pips away, that's good enough. Don't you think so? So, dollar yen, buy stop, 108.38, stop loss 107.68, limit exactly 100 pips, 109.38. 70 pips of profit, 70 pips of loss if my stop is hit, 100 pips of profit if my limit is hit. So the risk reward ratio is okay. It's more than above 1 to 1, and that's all what we need. Okay, so this is my order for the dollar yen. I place the order and I wait for it to hit. And with this, we come to the time for our second break of the day. I really hope you are following these recommendations. I hope that you have your real account in front of you, waiting to make some profit, not just watching and doing nothing. I want you to watch these webinars and use them to achieve profit. So that is why I am you to open your account, your real account with us, with FX Educast, with our favorite broker, QTime FX, the sponsor of every day webinar that you are watching. We are offering you fantastic spreads, 0 commission, and a generous bonus of $500. You have absolutely no reason to let this opportunity to open a real account with unbelievable spreads, very low cost of trading, with a fantastic broker like QTime FX. And of course, by doing so, you will be able to watch all of these webinars all the time. Every day we're going to analyze the market together. Every day we're going to have a trading session. Every day I'm going to show you the best opportunities in the market. And all you have to do is take the numbers that I give you and place the orders on your real account. And that's it. Okay, guys? So contact us at fx_educast via Telegram if you want to open your real account and join the fun. For now, guys, I am going to take a break of 5 minutes, our second break for the day, and we will be coming back after that. Shelton, I'm very happy to have you here, buddy. I think this is the first time that you are with us. I remember your names, guys. Don't think I forget. I remember all the names. So when I see a new name, I know that is a new name. Can you look at dollar Canadian as well? Yes, buddy, we'll do that immediately after the break. So enjoy your break, 5 minutes. We have a request for dollar Canadian. Georgius, hello, buddy. Welcome back. Georgius is someone who has been here with us every day, while Shelton is our new fan here. Thank you for joining us. Thank you for your attention, for your interest in what we are doing here. That really makes me happy and thankful. And as said, guys, we're going to take a break of 5 minutes. And after we come back, I'm going to take your requests. First in line is going to be Shelton's request to analyze the dollar Canadian. So see you in 5, guys. Enjoy your break, and I will be back really soon. Okay, guys, welcome back. How's everybody? How are you doing? I hope you are doing great. I hope you enjoyed your short break. Thank you for being with us again. This is fantastic to me. I love having you guys. I love taking your requests. I love talking to people who love the market. So when you leave your comments, when you leave your requests to analyze the market, I become a very happy man. So go on and make me a happy man. Okay, we still have 1 hour, and of course we are going to spend that analyzing the market together, and I really hope that you will find benefit and joy in the final hour for today. The first thing that we are going to do today is to in the final hour of today is to analyze the dollar Canadian, which is a request that we had just before the break. Okay, it's Shelton who asked for the analysis of the dollar Canadian, and we are going to do just that. Shelton, is the Canadian. Let me just open my charting tool, and I will be immediately with you. Okay, and here we go. Okay, so the first thing I want to do here is to look at the monthly chart. Why? Because of course we are starting a new month, so I want to see if I have a candle pattern or a bar pattern that can help me estimate what is the chance moving in one direction for the current month. So as you can see, we have been trading above, slightly above the moving average band on the monthly chart for almost 2 years. Okay, just a little bit, actually, no, 1 year, 1 year. Okay, so about 1 year, and last month we tried to break below the bottom of this band. Okay, and as you can see, that was not a good attempt by the bears. They failed miserably because the price came back to close not above the bottom of the band, but above the top of the band. So we closed above both moving averages. Now this by itself is a good indication, because a failed break to the downside is usually a bullish thing. Now let's take a look at the weekly chart. And the weekly chart says another story. No, it is not only okay, now it is good. It is real good for the dollar. And honestly, I am surprised. I haven't looked at the dollar Canadian for a while, but to see these bullish expectations for the American dollar after a third rate cut, that is a little bit of a surprise to me. What I want to do here is I want to calculate the harmonic ratios. We have two harmonic ratios when the retracement is deep, like this one. And these are, of course, these are, of course, the 78.6 and 88.6. And as you can see, I knew it even before I drew this retracement, that it is going to be extremely close to one of them. So we are very close. The bottom that we saw last week is very close to the 88.6 retracement for the previous move on the weekly chart. So this level is at 30.57. Okay, so keep in this number, 30.57 is an important support. I'm gonna leave it here on the chart so you can remember it. Okay, Now, the fact that we closed last week above the open of the previous week is very bullish. We have tried to move much higher, but unfortunately we were unable to close very close to the high. That is not very strong. Yet, closing above the open of the previous week is a sign of strength. And now, in a new week, we are trying to push higher again. So, up until now, things look good for the American dollar and not very good for the Canadian dollar. Let's switch to the daily chart. And here, of course, as you can see, we had two very good days. After not a lot of action for the bulls. And this may be because we came close to the moving average band, or maybe because we have bumped into a retracement level that we need to care about. So let me calculate the key retracement levels for this move. Let's see, what about the 50%? Yes, the 50% is very, very close. So in my own opinion, this level is 31.95. So 31.95 is the resistance that we need to care about for now. And I'm gonna write that. Support, we talked about support, right? 30.56, right? And 31.95. Let me just double check the support. It is 57. So this is it, guys. This is the support and resistance that we need to care about for the time being. And a break of either of them is expected to move the market in the direction of the break. This is my opinion about it. So once and if we trade above 31.95, that means chances of moving higher will become greater. As you can see, the moving average band is slowly dropping to the downside, and of course that means that this is the daily chart, so we're going to need a couple of days, a number of days, until these two moving averages are closer than this to the 50% level. But if you buy because you are trading above the 50% level, and that of course from the chart that we are observing right now, that sounds like and looks like a great decision, a good decision. If you do so, I want you to keep your eye on your trade until the time that we break above the moving average band. For today, the moving average band stretches up to 32.20. So even if you buy above 95, maybe at 32.05, you know that you need to overcome 32.20 before you can forget about this trade. If you are a cautious trader, maybe you will wait until the price breaks above 32.20. But in my own opinion, trading above 31.95 is a good enough reason for us to establish a long position. Now, I want to use my microscope and go lower to the hourly and intraday charts so we can see if we have closer levels than that. If we draw a trend line connecting October 30th and November 1st, which were of course Wednesday and Friday highs, we can see that we have a trend line that is currently running around 90. Having this trend line just a little bit below 95 does not mean we need to forget about 95. Actually, it means that 95 is strong because now we have a trend line that is also close to it. We have two daily highs that are both very close to it, especially this one. Look at this unbelievable high on Friday, guys. 96. The Fibonacci level is 95 and the daily high on Friday is 96. You cannot just see these things on the chart and act like you don't see them. It is really obvious that 31.95 is the resistance that we need to care about. Shelton and everybody, of course. Shelton and everybody else. Okay, so now we have found the support and resistance that we really need to care about, which is fantastic. The question now is where to get in. This is the most important thing in my mind. On my mind right now, I want to know, should we get in on a long or short position? I prefer the long here, but not before breaking 31.95. So my position is going to be something like this. Buy at 10 pips above 31.95, 32.05, and stop and limit are still open. So let's find them out. For the stop, of course, I cannot wait for 30.57. That would be more than 150 pips. So I will have to count on the retracement level for the retracement levels for the last part of the move to the upside. We do have the 50% level almost tested. Actually, it is. At the time being, it is 31.27. We also have the 61.8 level at 31. So with these bottoms, these hourly bottoms around current time, I think that we can count on 27 as the support that, if broken, we need to forget about our long position. So 27 minus 20 is 31.07. It is 98 pips, but then again, it is the Canadian dollar with a pip value that is about 75% of the pip value. The euro, pound, Aussie dollar, Kiwi, gold, oil. So in dollar terms, these 98 pips are about 70 pips in dollar terms compared to other instruments. So it is still within a reasonable stop. I would prefer it if we had a smaller stop, but it is still within what we accept. Now, one of the ideas that we can use here is not to wait all this much until 95. Well, we do believe in a long position. The market is well structured. The recent price behavior is pointing to strength, as you can see, and that may force some traders to, it's not force, of course, may encourage some traders to jump in earlier than what we prefer. If you are somebody who really believes in buying the dollar Canadian today, and you don't want to wait for it to trade above 31.95 because we are around 50 pips below that at the moment, then you can use the moving average band and the micro term, sorry about this, micro term retracement tool, or the very short term. This is something that I do sometimes. I want to use this as well. As you can see, the 38.2 retracement level for this very short-term move is at 31.52, and the top of the moving average is exactly touching it. So that may be a reason for some people to do this. $10 pips above this level, we are in, and that of course would make our much more reasonable. Now, what about the limit? We said that we do have a resistance at 32.20, but we need to see if this is a good enough target. It's 58 pips against 55 pips of a stop, so it's basically 1-to-1 risk to reward ratio. It is not bad at all, in my own opinion. It is good, but let's just double check if we do have another resistance just above 32.20 that we can use as a limit for today's signal. 32.20 should be here. So what about retracement levels for the last move? 61.8 and 71.4. We do have the 61.8 just above the 20 at 31, and we do have previous tops here For example, October 14th daily high was 32.40, and again October 15th was also exactly the same high, 40. We do have 20, 30, and 40 to count on as limits for this trade. I would go for the 40. We do have a chance. We do have a bottom that is very close to a 50% retracement support here, and we do have a price action supporting at least a short-term uptrend. Maybe on the weekly chart we have a weakness sign, but on time frames that are less than that, daily, 1 hour, 4 hours, they are all supporting a move to the upside. So in my own opinion, 40 is a good limit, and I'm gonna place my order right now. Where's the Canadian? Here it is. We're gonna buy stop at what price? 31.62, and we are going to use 31.07 as a stop and 32.40 as a limit. So this is my recommendation for dollar Canadian for today. You can see the euro, since we last talked about it an hour ago or so, is facing some problems, and this is good. Why am I saying this is good? Remember, we have two orders to buy the euro. One of them is in the 1130s, and one of them in case it breaks above 1183. So if the price drops to the 30s, that would be fantastic, because our order will be waiting for it. As you can see here, this is our buy limit around this level, and we are halfway between where we were in the morning when we first talked about the euro and our limit. So I really hope that the price, the bears can really attempt to push it even lower than that in order to get our long position at 1130. I am praying for that, guys. Okay, you are most welcome, Shelton, and you can come here every day and you can ask me for any instrument you want, and I'm going to give you a recommendation or a technical point of view and an analysis, or showing you the most important resistance and support levels, or a direct trade recommendation: buy here, stop here, limit here. Okay, so with this we do have our orders in place, and now we need to continue with another instrument. One of the instruments that I know you guys are interested in these days, although it is, in my own opinion, it is high risk, is the British pound, of course. And capitalize on Brexit, but nobody thinks of what? Nobody thinks of the risk. So the pound, what are we going to for the pound? These retracement levels are still here from last week, and this is the retracement level that we were really interested in. It's 71.4 retracement level, my own retracement level that I have discovered and I'm very proud of. And as you can see, we have many daily highs that are very extremely close to this level. Okay, and these are October 31st and November 1st. Late last week we saw highs at 29.76, 29.73. while our retracement level is at 29.75. Unbelievable accuracy, guys. Unbelievable accuracy. So with this kind of resistance, I don't think that the pound is in a good situation to achieve more profit. And to see if that makes sense on the indicators front, I'm gonna check and see what are the indicators saying. I'm gonna start with the daily. Well, as you can see, RSI and stochastics have been both in the overbought area, and now they are at the bottom of that area, about to leave. Okay, so this is not a sign of strength. No, it is not. This can push the price lower. Of course, if the RSI leaves the overbought area, and stochastics of course as well, that can result in some kind of weakness. And we do not have a reading or a recommendation coming from the MACD, but the two lines are very close to each other, and once the MACD crosses below the signal line, then we will have a third signal from the indicators that this thing is not strong. It is not strong, guys, and we really, I really believe that going higher than this, at least for the time being, is going to be hard. Let us take a look at the 4-hour chart and see what does it have for us. As you can see, also we are dropping here. Indicators are pointing to the downside. They are leaving the overbought area and moving to the oversold area. And but one positive thing is that we are still above the moving average area on the 4-hour chart. I'm gonna switch down to the hourly. And here we start to see serious signs of weakness. Now here the price is trading below the moving average band, and this by itself is a weakness sign, but we need to draw support here around this area. Let's see. As you can see, we have been finding support since Thursday around what's the low here, 29.23, here 29.22, 29.24, 29.25, and the most recent candle, hourly candle, 29.25. So we are currently standing exactly at the support, which is in the 29.20s, and maybe the lowest point seen in the past 3 days of trading is 29.22. A break below 29.22, in my own opinion, is a reason to sell. So let's write that here. 10 pips below that, 29.12. Okay, let's keep this here and look for a support, a resistance that can help us specify our limit and stop. I think we have a resistance that we can count on, and that is of course the 71.4 retracement level at 29.75. So my stop's going to be above that. The pound is a little bit volatile, so my stop should be maybe 30 pips above that, so 30.05. Okay, and I realize that the stop is 93 pips, but you know what you can do. This is the stop that you need to use. Now, what about the limit? What about the limit? The limit here, the last move took the price up from levels below 28 to levels above 30. So if we are correcting this move to the downside, we need to, of course, pay attention to retracement levels and previous tops and bottoms as well. And of course, we also have a trend line here that we need to care about as well. Now, for the retracement levels, as long as we do not have a new high or low, then they will continue to be the same for eternity. But for rising trend line, of course, I'm going to tell you where the trend line is now, but you need to keep your eye on it, okay? And as you can see, the current trend location for the trend line is in the 2830s, which is extremely close to the 78.6 level in the 2227. And that is why I'm going to use 2227. Sorry, 2827 as an initial target. Now, with the of behavior, guys, with stopping at very important retracement levels like 71.4, that means that this thing is weak. It is seriously weak. So it might be looking for even lower levels than this trend line and retracement level here. From my own experience, and many times, when this happens, when we stop at retracement level like this one, the bottom of the previous move will be penetrated at some point in the future, in the near future. So it might take some time, but we can think of levels below 2787. And if we want to try doing that, then we need to look at the bigger picture. This is big move. Oh my God, what kind of move is this? It's unbelievable. Of course, this is Brexit reaction. And I calculate the retracement levels for all. Let's get rid of this. I want to clean the chart so you understand what I say. Of course, in all cases, even if we are heading towards levels that are below this bottom, if we believe we are heading there, we need to pay attention to this trend line. Once we approach this trend line, if we fail to break it, it might be time to close your short position. And if we do, by then you would be having a wonderful profit, and this profit will make it easier for you to take the decision and close your position. It's easy for us to close our profit. We are human beings. We love to make money. But when it's loss and you tell the trader, please close your position here, they are, oh, well, let's wait. What if, maybe, I hope, and you know, these kinds of reactions that I really don't like. But, you know, this is human nature. For with profit, it's easy for you to close them. So when we reach this trend line, if we reach this trend line, you will be in a very good profit, and you can be relaxed while making the decision of picking between closing your position around this level or waiting for levels below this bottom. If you want to wait for levels below this bottom, if you don't believe that this trend line is going to cause us problems, if we penetrate right through it, and that would be fantastic, then I'm going to use the minimum, the first of the key Fibonacci levels for the whole previous move, and that is 27. So instead of 28.27, I am shifting my limit much lower to 27. And now we have something. Okay. So I'm gonna place an order to short. Still stop. 29.12. My stop loss is 130.05, and my limit is 1.27. Okay, guys. And placed. Fantastic. So I am now ready to capitalize, even if I'm not very near to the price screen. I'm ready to capitalize on a bearish move if we break below this horizontal support that it is really obvious. I don't think we need to really talk about why we are selling below this horizontal support line. Just look at these lows and you will know. Okay, guys, so this is it for the pound. Now, what if we break above 29.75? Of course, that can initiate a buy position. That can change our mind. That can leave us expecting that, whoa, 29.75 did not stop this rising and raging bull. So this bull is expected to continue moving higher. And that, of course, although I don't like to place a buy order, and I don't really recommend it, but in case you are interested in this side of the market, I'm not going to place this order. I'm going to place a reverse to the order that we have just placed. The entry level is the stop for the short, and the stop for the long position is the entry level for the other order. So it is, of course, a reverse position. But what about the limit? The limit, I remember that we found last week, we found important long-term level around 32, if I'm not mistaken. It was a retracement level. I want to go back to that chart, and I want to see what kind of level that is. I think it was the 78.6. No, the 88.6. Yes. So this is at 32.19. So 32.19, and as you can see, this is a very volatile instrument. News can come out about Brexit or talks between the UK and the EU at any moment, and that can, of course, generate or help to generate very strong moves in one direction or the other. And that is why the limits, as you can see, are very, very attractive. But I'm not going to place this order, okay, guys? I would stick with my short position because of the reasons that we have talked about so far, and including this chart here. It is pretty bearish. A top very close to the or exactly, almost exactly at the retracement level at 29.75, and these indicator positions here are not very encouraging for a long position. Okay, so let us take a look at the last instrument for today, and I am going to analyze the Australian dollar. Australian dollar is something we talked about last week, and it was interesting to talk about. Let us continue. Let us continue analyzing it, and what I want to see is the monthly close, because we are at the beginning of a new month. I want to see if things are whoa, guys. I am glad I decided to take a look at the Aussie and at the monthly chart in specific. As you can see, we do have a cross here on the stochastics, and we do have the RSI reaching the oversold area and then recovering, and that is also supported by this strong green candle to the upside, which has closed at the highest close in 4 months. Okay, so this is the highest monthly close in 4 months. Okay, and as you can see, we are starting to push higher on the new month. Now, what about the weekly? Well, this is very similar to the pound, or actually, sorry, not the pound, the Canadian. We had a weekly candle that is touching the moving average band. And as you can see, with this weekly high, the previous week high is touching the moving average. It is not a very good thing, unlike what we saw on the monthly chart. Here on the weekly chart, we have a barrier that is exactly right in front of us. And that's why, although I really believe that we can move higher, what I think is that we should wait for the price to trade above last week's high, which is not very far, by the way. As you can see, we are very close to that. Now, what about the daily? The daily chart is also showing signs that we may soon show exhaustion. Let me as you know, I always use retracements, but I want to decide on which level to start from. I think we agreed last week that we should start from the highest price seen after this flash crash, this infamous flash crash, and towards the lowest price that we have seen recently. No other ones. Deep retracements. I want to start. Wow, this is good. Yes. Okay, so we are currently very close to the 38.2 retracement, which is at 69.09. Now we are only pips above that. We need to push higher on this retracement level in order to open levels, to open the road to levels that are higher than that. We still have the 50% level at the 69.83, and we do have 61.8 at 70.57. So once we start pushing higher above last week's high, we should expect a trip minimum towards 69.83 and maybe even to 70.57. Keep these numbers in your head, guys. Okay, but is this what is going to happen? What about the 4-hour and the hourly? What are they telling us? As expected, they are not telling a pretty story. You know, we have been facing problems with the last week's high, and all we need, in my own opinion, all we need is to trade below the moving average band in order to open the way lower. Okay, the moving average band is, let's consider it at this intraday low. It is actually the overnight low, which is 69.03 or 3.5. Let's round it up to 4. Okay, so if we start trading below 69.04, that could be a justification for a short position. On the other hand, we want to see the price above last week's high in order to justify a long position. So here I'm going to give you two recommendations pointing in two directions. Okay, 69.30 and 69.03. So I'm going to start writing. Sorry about that. Yeah. So support is at 69.04. We rounded that up, and resistance at 69.30. A break of either of these levels is enough for us to initiate a position in the direction of the break. Okay, and that is why I'm placing an order to buy at 69.40 with a stop 10 pips below the support. That leaves us at 68.94. And at the same time, I'm gonna sell if the price reaches 68.94 with a stop at 69.40. Now, I still need a limit for both orders. And that's why I'm gonna head to the charts again, looking for a limit. And then we can place our orders. Okay, first of all, let's look for a limit for the short position. The minimum is 68.83. Of course, when you place a limit, or when you look for a limit or a stop, it's not only technical analysis. You need to use also risk management, and you need to assess if these targets and stop losses are suitable for your investment method or not, for your investment targets or not. So when I see this level here at 68.83, of course I'm gonna neglect it. I'm not gonna use this as a limit, and I would prefer to use lower levels like the deep retracements of the harmonic trading, 78.6, 88.6. As you can see, we on both of them we have tops and bottoms. Here on the 78.6 we do have this top and this one, which is very, very good for this level, and we also have support showing at 68.23, the 88.6 retracement here and here in this area, and also we have top, an intraday top around here. So we can use either of them. My favorite is this one because it's a bottom here and here. So it is 68.23. So now I have myself a whole signal, a whole full recommendation. Now the second recommendation is to buy, and I want to find the limit for that. Okay, as you can see, this, we can adjust this trend line to connect the tops on the hourly chart, and I want to connect these tops here and here. And as you can see, the trend line is pointing just below 70. Do we have a retracement level or an important level on that? We have the 83, of course, the 50% level. As you can see, so the 83 might be a good target. But it's only 43 pips, so I would really push that just a little bit above to a significant top or bottom that was witnessed just above the 50% level. For example, we have this 69.96. It's okay. We got ourselves 13 pips. 69.96. Okay, so these are the recommendations for today for the Aussie, and I'm gonna place my orders immediately. Keep your eyes on the euro. I love this move. I really hope we see 30s before we turn around. I really do. So we have a buy stop. Both of them are stop orders. We have a buy stop at 69.40. Our stop is 68.94. And our limit is 69.96. And place. Okay, now the other order. If the market starts moving south, we want to sell if we start trading below 69.04. 10 pips below that, 68.90. So stop, first of all, of course, 68.94. Our stop is 69.40, of course, and our limit is 68.23. And place. And this is it, guys, for today's recommendations. We have placed our orders on 5 instruments, and tomorrow we're going to check and see what happens to these orders. Hopefully we will be talking about profit, and if you follow these recommendations, please always keep your risk limited. So don't risk. If you always you need to calculate what percentage of your account does your stop translates to. So if you are trading at trading size, lot size, that means that using our stops will cost you 2%, 3%, 5% of your account. That is okay. But if you are trading at using a lot size, that when you use our stops, it leaves you with, if a stop is hit, with 20% or 15% of your account, then you are doing it extremely wrong. So what I want you to do, of course, I can help you with analyzing the market, but the risk management, it's different from one account to another, from one equity to another, from one trader to another. But I can give you the general rules, of course, that you can calculate and apply to your account. What I'm saying here is that please always calculate the stop loss for your trades and keep it in the round of 2 to 3%. This is my advice. If you have to push it to 5%, that is the maximum that I can think of, and I don't use that all the time. You know, sometimes you find yourself unable to use a stop that is only 2% because of some technical analysis issues, because of the distance between the entry and the support or resistance you're counting on. But in most cases, you will be able to place a stop that will only cost you 2%, 3% of your account. And if you are a beginner, I'm going to push that lower to 1%. So if you are new to this market, if you are in your first day, first week, first month, first 6 months, then what I want you to do is that always calculate the trading size, the lot size that will leave your account only 1% less when your stop is hit. This is what you should do until you gain enough experience. And when you do gain enough experience, you can count on yourself to trade with a little more risk, 2% per trade, 3% per trade, okay? But never ever do the thing that a lot of people do. Unfortunately, I see traders all the time do this. They risk 15% of their account on one trade, 20% of their account on one trade. Now, what if you're wrong? Everybody is wrong sometimes. Nobody is correct all the time. No Buffett, no, not Soros, not Michael Marcos, not Jesse Livermore was not correct all the time. You know, nobody's correct all the time. If you think just because you know candles and bar patterns and retracements and how to use moving average and RSI, then you're right in every time. When you look at the charts, then you don't know what you're talking about. Okay, guys, you will never ever be right all the time. And let me remind you of a quote, one of the quotes that I really like. It's by the legend, Peter Lynch. Peter Lynch said this, guys. He said, in this business, if you're good, then you're right 6 times out of 10. Okay, let me repeat the quote. Peter Lynch, the legend, that the man who between 1977 and 1991 was the best fund manager in the world. Okay, he amazed everybody. He made the kind of profit that others only dream of. Millions of traders dream of, but he did it year after year from the 70s to the early 90s. Okay, and this is what he had to say after this kind of unbelievable experience that he had in the market. He said, in this business, if you are good, you're going to be right 6 times out of 10. You will never be right 9 times out of 10. And these are not my words. These are the words of Peter Lynch, one of my favorite people in the whole world. Okay, so don't think that you can be right all the time. You should not expect that, or 90% of the time. So when you're wrong, just always ask yourself this question. If I'm wrong with this trade, what will happen to my account? I'm going to lose 2%? That's fine. 3%? Yeah, that's okay. 5%? Yeah, that's the maximum that I can accept. And I don't do it all the time. You know, from time to time, it's okay to go for the 5%, but not more than that. But if you calculate your stop using this trading size and you find your account dropping 15%, 20% in one trade, then you will definitely lose your whole account very, very soon. In a matter of weeks, if you're lucky, you will survive 2 or 3 months, and that's it. Then game over. Okay? I don't want you to see that game over on your account. I want you to keep on trading day after day after day, and of course that comes only from great risk management. So guys, analysis is great, technical analysis is fantastic, fundamental analysis is great. Every analysis method or tool that can help us understand the market is highly appreciated, but without risk management they mean nothing. They mean absolutely nothing. Okay guys, so with this I'm gonna leave you for today. I'm very happy to be with you again for one more day, for another week, and I'm really happy about that. And of course, before we leave, I want to remind you that this webinar that I enjoy so much is sponsored by QTime FX, our Forex broker, our favorite Forex broker, who is offering you, of course, to begin with, and fantastic spreads. These spreads are the ones that gave QTime FX the award for the lowest Forex spread broker in 2018. Only 0.4 of a pip on euro dollar, dollar yen, and with 0 commission. And if you don't find that enough, then we are offering you $500 of withdrawable bonus, guys. Withdrawable. This is the magic word. Okay, it's not a trading credit, it is withdrawable bonus. So contact us at fx_educast. Let's open this account for you and let us start trading together. We look at the market every day, we issue recommendations every day, and if you do not implement these on a real account, then what's the use, right? So I want you to come back with your real account and start trading the recommendations that we are giving on a daily basis. Thank you very much. Thank you guys. Thank you, Ethan, for your nice words. And thank you, Shelton. Thank you guys. Thanks for everybody who was with us today. I don't want to forget anybody, but we have more names. We have Victor and Ethan and Jennifer, Shelton, of course, and Georgios. Thank you all for being here, guys, and see you again tomorrow around the same time, 21 hours from now. Have a great time, and as always, good trading, and good luck. Bye bye, guys. See you tomorrow.